I always recommend getting at least an annual review done on where you stand, not only from your financial planner's perspective or your CPA's perspective, but your wealth advisor or your home loan consultant. You want to look at that because your home is one of your biggest assets. Using that in the proper way to leverage your goals. Hi, it's Jim Black, bringing you local real estate today for the last week of October in 2025. Today, we've seen rates now at a historic low over the last 14 months for home loan mortgages. What does that mean? Well, in a recent study, FHFA showed that over 88% of homeowners have an interest rate below 6%. So as rates go lower, we're seeing them dip now to about 5.75 with an APR of about 5.81 as of today, October 28th. When you're looking to refinance or looking at your finances, you have to look at the overall opportunity cost on your money. What does that mean? It means don't just think of your first mortgage rate, but think of your all-encompassing debt that you have on all things. Mortgage, car loan, credit card debt, student loan debt, maybe home improvement loans. Whatever you have, when you look at your cost to borrow money, put all those into one category. That's known as your blended rate. When you look at your blended rate to borrow, it should make it be really clear if it makes sense to refinance or not. For example, if I have a first loan of $200,000 at 3%, which is a great rate, but I have $300,000 outstanding on a line of credit at 9%, my effective rate is truly 6% to borrow that money. So you want to look at the blended rate on all the money you're borrowing to make a good decision. A lot of times people also don't realize when rates go lower, they should rethink their strategy around their long-term planning. For example, maybe you're having kids and you need to plan for a bigger bathroom or bedroom, or maybe you're wanting to right size and you can't move yet. You can use your house equity to make that happen. You can do that by getting either a cash out refinance or look at some great remodeling loans that are available. In any circumstance around financing, it's really important to look at both your short-term and long-term goals. We look at that every day by looking at the cost to refinance. We always provide two solutions, one that has less or no costs and one that has more costs. And those differences are interest rates. And we look at the interest rate difference versus the cost difference to determine the break-even analysis. I always use the quote that if it cost me $10,000 in closing costs to save $1,000 a month in payment, that is a very good decision because my break even is only 10 months. On the other side of that, if it cost me $10,000 to save only $100 a month, it would not be advisable to do that because the break even would be over 8 years just to get my money back to have saved more money. So you always want to look at the break even analysis when you're doing anything. When you determine your blended rate, you then look at the break even analysis of doing anything on your property and then make a good decision, informed decision for you and your situation. There's no right size fits all loan that's out there. A lot of people have a different duration or time frame for having a loan. And really it comes down to how long you're going to need a loan, how long you're going to stay in the property you're in. For example, if you're in the military, you're only most likely going to stay in your house 4 to 5 years because you're redeployed every 4 to 5 years in other parts of the country. So in that example, it's important to have a lower cost to have a loan versus a lower interest rate because you're more than likely going to sell that property and move somewhere else. If you're an empty nester planning to stay in your house forever, then you're better off buying the rate down as much as you can to have that cost of interest be as low as you can for as long as you live there. So you always want to make sure that you're matching your personal goals with the right loan solution. We're excited that we're able to offer several of these solutions where we're able to take a term of a loan. We can actually modify the term of the loan anywhere from 10 years to 40 years. So we could even right size the term of your loan, which then would change your payment elements to be able to have those goals met up with your long-term needs. Again, it's always great to get updated quotes and make sure that your plan fits your lifestyle, not only today, but in the long run. I always recommend getting at least an annual review done on where you stand, not only from your financial planner's perspective or your CPA's perspective, but your wealth advisor or your home loan consultant. You want to look at that because your home is one of your biggest assets. So using that in the proper way to leverage your goals, a lot of people think that they have to have a free and clear home. Equity does nothing for you. It does not build wealth. It just sits there. So sometimes it's better to look at leveraging your equity to get you to your goals sooner. Maybe you want to remodel your property like we mentioned. Maybe you have have kids in college, you need help paying for their bills. Or maybe you have grandkids that you want to give a gift for 529 college savings plan. Whatever your goals are, it's important to really revisit these every year to make sure that you're on track to meet your goals. So when we say rates go lower, we get really excited because it should create a call to action for you as a homeowner to go look at your plan to make sure that it's up to date with all the different variables in your lifestyle. And again, it's free to do this. There's no cost to look at this from a licensed professional in your local market. I'd love to be a resource for you. Have a great Halloween. And I'm excited to share that, again, interest rates have dripped below 6% on 30-year fixed loans. Today is October 28th, 2025. And I'd love to be a resource for you and your family around home ownership and home financing. Have a great Halloween, and we'll see you soon.